Welcome to the Family Business Audiocast on LinkedIn. I am Artem Smith, creator of this Audiocast series, and a warm thank you to our live audience today on LinkedIn, and also for those listening in the future. I'm very pleased to host Judy Pearson. Judy, great to have you today.
Oh, thank you so much for including me. I really appreciate it.
Absolutely. We're going to cover some important topics today and learn about you and your organizations as well. So I will start with a bit on Judith. Judith is a recognized leader in fiduciary risk management, specializing in developing tailored insurance and risk mitigation strategies for trustees, global family offices, and of course, alternate worth individuals. She is the founder of Precision Brokers and Nomadics, and where she has pioneered innovative strategies on addressing some of these complexities of trust structures and related matters around wealth transfer, succession planning, liquidation, governance, all of the important topics we cover on the Family Business Audiocast. Her work ensures that family enterprises and their fiduciaries are protected from unnecessary litigation, evolving regulatory challenges, and also the hidden liabilities that come with managing generational wealth. With her leadership, she has reshaped many families' thought process about risk and offering specialized solutions that go far beyond traditional insurance models. So excited to talk about that. Great to have you here today.
Well, thank
Um,
you.
yes, why don't we talk a bit about you initially? Tell us about your companies, and then we'll come into some Q&A next.
Terrific. So I come at this from a different perspective than most risk management and insurance professionals. So I started in the insurance industry way back in 1982, handling directors and officers liability insurance. And the reason why that's important is at that time, nobody really bought D&O insurance. Nobody really understood what it was. And we spent a lot of time from an underwriting perspective teaching boards of directors what their fiduciary duties were. And it wasn't until the construct of merger mania of the 80s did you get what we have as the D&O management liability structures that you have today. And I believe that trustee liability, family office liability, et cetera, is exactly where D&O is back in the 80s. So I did that for about 20 years. I was the fourth employee of what became the Global Financial Services Group for Aon. And that's important because did a lot of very large global programs, the UAL pilot buyout as an example, where most of my clients wouldn't say what products are available. It was more, I'm thinking about XYZ. How are we going to solve the problem? So that's how I was brought up in the industry. I left in year 2000. I co-founded a company that provided title insurance for fine art and other important collectibles. The reason that's important is that gave me really good insight into tax, trust, and estate issues for personal property. We sold that in 2010. I lived out my employment agreement and thought, well, I'm not really ready to retire. I wonder what else I can do. And so I went to the trust and estate attorneys, family offices, et cetera, and said, you guys know me as the art girl, but I have this other big background. What is the number one issue your clients are facing today? And bar none, everybody said trustee liability. And I was like, 15 years ago, that would have been really easy. I wonder what's going on. I did a deep dive into the industry, understood how it is evolving, how technical it is, and how important it is really to understand what is being structured. And then I went to the underwriting community to find out what they were doing. And it really turned out that most people in the underwriting community from an insurance perspective hadn't been following these trends. So none of the policies were working, and they weren't even asking the right underwriting questions to really make sure they could structure the policies appropriately. So I opened up Nomadics and ended up with Precision Brokers. We don't really need to go into all those details, but the two companies together represent an insurance broker through Precision Brokers, which is a full service broker, but we really focus on trustees, trust companies, and family offices from a management liability perspective. And Nomadics is an underwriting facility that I created where I rewrote the policy and rewrote the underwriting structures in order to really provide a solution to the marketplace.
Mm-hmm. That's great. Yeah, I was reading about that. We'll cover that a bit more about your industry and your company in the conversation. Let's go back high level to the industry of family enterprises, which I cover here more broadly on the Family Business Audiocast, covering the ecosystem of the entire family enterprise. So we will talk about family offices, but really the focus is on the broader ecosystem. So
Mhm.
there's this massive wealth transfer that's coming, as we know, the next couple of decades, 70 trillion or so, next gen, G2, G3. There's a lot of wealth that's been built up. And a lot of my clients and single family office and friends in the industry building family offices and family wealth, and also looking to, frankly, preserve that wealth as efficiently as possible, from a tax perspective or insurance perspective, um, is a massive issue, and I think it's becoming one of the key topics of the private bankers and lawyers and experts like you, of course, um, in this transfer. And I think part of the reason the transfer that's happening is so significant. It's not just the amount; it's also the change of the generational activities and interests of the next gen. Let's talk about some of the vulnerabilities in trust structures and fiduciary responsibilities. So talk a bit about that intersection of, let's say, trust laws, litigation risk, and how do you advise family enterprises to think about this intergenerational dynamics, from a fiduciary perspective. So there's the risk, and there's also the legal side, and then there's the G2, G3, and they're, sometimes they're not quite as involved in the business.
Yeah, and of course, that's a whole mouthful, so I'll try and be as succinct as possible. But as I'm looking at understanding the evolving structures and the intersection of each, the trends I'm watching is what we think about as a family office or the single family office. It's really evolving into the new private equity. Actually, I just saw an article, I think it was Fortune this morning, that was talking about a PwC study that was saying that 22% of all startup capital in 2022 was raised by family offices. So when you think of a family office, or when I think of a family office, I delve very deeply into what are their investment structures and how are they accomplishing their goals to make sure that we are providing the right risk management. From there, a lot of our very large companies are starting to form private trust companies. And I see that as the next evolution, where in that structure, the families are really focusing on the intergenerational wealth transfer and family governance structures, which I think is a really cool way of institutionalizing the trust structure.
Mm-hmm.
And then, of course, for both of these entities to stay together, trusts and trustees are the link across all the wealth transfer vehicles. So then you start thinking about, well, where are we going to see the litigation? And we are seeing some litigation. A lot of the states that are family offices or are private trust companies and trusts are getting structured have a lot of sealed, structures for litigation. So it's a little bit harder to find out exactly where the litigation is. So I can really talk about more what we're looking at, kind of putting together what I've seen over the last 40
Mm-hmm.
years. But we see, the new trust structures. You have last I looked, it was 33 states who had who have adopted the Uniform Trust Code and asset protection strategies, which really haven't been tested yet. And I really put a big Y, capital Y on yet, because we're
Mm-hmm.
starting to see a couple, and we can get into that in a minute.
Okay.
Also, new roles and responsibilities. Every month I see a new role and responsibility, and I have to dig in and figure out, well, what does that mean and what does it do? Is it a fiduciary role? Is it not a fiduciary role? Is it consistent across states? For example, trust protectors in many states, depending how it was structured, is a non-fiduciary role, but then you go into certain states and it is a fiduciary role. And all of those impact what the legal liability is for the individuals and what the litigation might look at.
Okay.
We're also seeing, oh, do you want me to stop there? Because I can go on.
No, I think we have a half hour today, but
Yep.
I am going to have some experts this year on trust structure and generation skipping trusts and private trusts
Mhm.
and offshore trusts. But we'll keep it tight on today's
Okay,
call, covering a couple different topics. So
perfect. But it's
um,
important just when you understand all those roles, how
yes.
it integrates with, for example, the Corporate Transparency Act. Who is required, who has to report the beneficial ownership of LLCs? So it all integrates together in trying to understand risk management strategies and risk transfer strategies. So I just wanted to get into that for a moment,
Hmm.
or just kind of mention that.
No, it's true. I'll try to cover that again in the rest of the call. Okay, so let's talk about insurance. Super important for all family offices for their operating assets and also for their lifestyle assets. And often families rely upon insurance as a safeguard, and often have policies that exist for a long time. Sometimes they're out of date. Sometimes they don't take into account the complexity of the operating assets, or it could be a large art collection that's more complex and offshore. So, just talk about some of the gaps that family offices and their advisors can think about to mitigate the risk in insurance policies for their primary assets, and also, there are misconceptions about what insurance can and cannot protect also in the realm of wealth preservation. So let's cover that for a couple of minutes.
Okay. So first of all, most of the property casualty insurance brokers that work with family offices and ultra high net worth individuals grew up within the personal lines framework, and they're excellent at managing the homes, the art collections, etc. But they don't necessarily understand the tax trust and estate structures. And that's where I have my expertise. So I don't really necessarily want to talk about the personal lines piece of it, but from a management liability perspective, really understanding these various structures to make sure that you understand what can be covered, what needs to be covered, and what should be covered, like you were saying. So, just trying to keep it to kind of a half an hour, I'm going to kind of pick on, from a family office perspective again, is it private equity? Is
Hmm.
it concierge service? And what does that mean and how does it get structured? But the next piece of it, and I'm just trying to get to some of the things that you might not have addressed previously, is
Hmm.
like the private trust company structure. There are a lot of gaps in that, misunderstanding the difference between regulatory requirements and optional requirements and how the laws are changing. And so, for example, in most of the states like Wyoming, Nevada, et cetera, you could either have a regulated trust company or an unregulated trust company. And
Right.
if it's unregulated, it's a preference on what types of insurance you purchase. However, I think most of the more sophisticated advisors in this realm are saying we really better be operating as if we are regulated to make sure that these structures are kept together.
Just pausing there for a second.
Mhm.
So, for the listeners, so explain a private company trust, generally
Mhm.
speaking, within a family office
Sure.
structure, within a family office dynamic, and then just remind people of the states that are most um, insured friendly and most popular beyond Delaware
Okay.
in the market today, and just pick on a couple states and why they're interesting.
Yeah. So private trust companies are a way to institutionalize the trust structure. And what I mean by that is instead of having a trust and when a trustee no longer wants to operate as a trustee or can't, or for a variety of reasons, when that trustee resigns in a traditional trust, the lawyer needs to, redo the documents, and maybe you have to go to court, and maybe you have to get approvals from beneficiaries, and it's a pretty complex process. However, in a private trust company, it's set up as usually an LLC or some other type of corporate structure. And rather than having to redo everything, all you have to do is change out the board of directors, committee members, etc. So when I say it's an institutionalization of the trust structure, all a private trust company can do is provide trustee services to one family, which includes their branches. So it's for the right complex families. It's a really interesting structure. I see most of these being formed in South Dakota, Wyoming, Nevada. I'm starting to see Florida raise their hand a little bit, and I'm starting to see New Hampshire start getting more aggressive. I've not seen Tennessee, who is pretty active in the asset protection, but I would expect that to be
Mhm.
coming along. And by the
Let's.
way, I'm not even sure Delaware recognizes private trust companies. So it
Nope.
gets, you have to find the right one.
Okay. So I want to dig in a little bit on Florida. You mentioned Florida because there is so much money in Florida and moving to Florida, and it is such a quirky state from a political perspective and a law perspective, and also labor law perspective. And there's obviously change in the political landscape. So for everybody who is either has children or a second home or first home or a family office in Florida, has wealth domiciled in Florida, I'd love to hear your thoughts on where Florida sits right now from a trust perspective, and where you think that's going the next couple of years.
I wish I had a good answer as far as what it looks like right now, because like you said, it's evolving. What I'm seeing is a lot of creative individuals are trying to incorporate the things that we've been seeing in South Dakota, Nevada, et cetera. So I think we're going to see a lot of interesting trust structures evolve in Florida that haven't been available up until now.
I see. So you're talking about the creativity of lawyers. You're not talking about state regulation changes.
Well, the state regulation changed recently, which has
Hmm.
allowed for the evolution of new trust companies coming in. And yes, the lawyers looking at how to structure the wealth transfer vehicles. So for me, it's a little too soon to tell, especially as you were already mentioning, so many of the organizations that have moved down there, Goldman Sachs, et cetera. I think we're going to see a lot of exciting things come out of Florida, but I don't know how to predict it.
Yes. Okay, good. Um, well, let's talk about trustees a little bit more, and their ability to estimate the liability. So sometimes trustees can underestimate liability when overseeing the trust. And as families grow and institutionalize and they demand more hands-on governance and expertise, bringing external expertise, bringing more intellectual capital, raising the bar, um, what do you see in the shift of trustees and their role, as external governors and bringing that wisdom from the outside? Do you see them like operating more like a board of directors or more like a outsourced CEO? Where's their role going to go in the market as the bar raises higher?
So, first of all, I don't think the majority of individual trustees understand the enormity of the job. And I think it's important for our wealth creators or grantors to really think through who they want as a trustee and what decisions they really want them focused on. So, for example, most of the friends and family members might not have enough experience in true trust administration. So, is that really where you want that person to be? Or do you want to set up a structure where that friend and family is doing exactly what you were referring to and being the orchestrator of all the various professionals and weighing in where they should be weighing in, which is generally, grantor intent and legacy, et cetera. And I think it's a big issue. And I'm seeing a lot of organizations start looking at how do we train our individual, and I would also call professional trustees, which are those individuals who have background, usually lawyers, retired CPAs, retired trust officers, who in later years are starting to offer these services to our families. So I think to answer that question succinctly, it's really thinking about who should be in what role and who can be hired to help manage the things that those people shouldn't be doing, like the administrative duties.
Also, Judy, traditional insurance models often fail to address these intergenerational issues and complexities. Like there's a lot of transfer going on of the illiquid assets to G2, and I'm seeing a lot of disagreements on the board and the charters of, okay, how do you really structure the trust either ex ante or ex post when the next generation is maybe less interested in the business. So if you could talk about how your companies are reshaping how the trustees and family offices address that issue, that would be great.
To remember, we're the tail on the dog, so to speak. So I often am in meetings and might raise my hand on, you might want to think about a few risk management strategies, but at the end, the board and the families get to decide how they're going to resolve these issues. And then it's my job to figure out how to make sure these things are insured.
That's true. Good point. Let's just go a little bit on the next gen, though. Like, what are your thoughts on next gen, and how complex, how diverse is the next gen activities going to be between staying with the operating companies and like moving on from the core business?
I actually find it really fascinating because the next gen has really been educated more than some of the other generations to be contributing citizens, and they're taking that on by their own mark and making lots of different investments. That gets back to the private equity question. So I think it's really important for the structures to reflect that. And then from the multi-generational businesses perspective, we start seeing a lot of outside management come in, making sure that they're still fueling with earnings the trust structures to allow the next generation to continue on with their mission and vision.
Okay. Well, what happens when you have a G2 that isn't interested in running the business or staying in the business, and they actually want liquidity to go do something else that's interesting for society? Let's just say like a philanthropic trust or a for-profit venture philanthropy, or just go out and start a significant charitable endeavor. I see this interest very, very high in the next gen to really leap into philanthropy, but make it more of a business. So do you see that happening? Like, how do you do that from a tax efficient perspective? Or is there really no way to make it tax efficient and you just have to deal with the after tax dollars to get the business going?
Again, I'm not the tech structure person, but what I can say is I have clients who have liquidated businesses because there isn't a next gen. I have other clients who are creating liquidity either through M&A activity or ESOP activity. So there's a lot of ways to create the liquidity for the next gen to do what they want to do. What I tend to see more in my circle is ensuring that the next gen is finding their voice and has the capability to implement the kinds of things we're talking about.
Okay, right. So it gets back to having a really strong bench of advisors across the lawyers and accountants and tax professionals, and then you guys at precision brokers and nomadics and firms like yours, you're supplementing those experts around the insurance side. Maybe a bit more on the innovation side of insurance, like what's going on that's innovative, that's exciting for you to offer to your clients.
So what's really exciting to me is because we tend to be one of the few insurance brokers who are really looking at this from a scope, is I'm getting a lot of opportunities to redesign how we look at risk management and how we implement the insurance policies. So that goes back to my facility, which by the way is open to all insurance brokers. And what we're really trying to do is train the rest of the market to think about some of the things that we're thinking about. So we started with individual and professional trustees. I'm crossing my fingers that I'm about 90 days out from announcing a new product for private trust companies. But it's really
That's
taking the
awesome.
old, thank you. It's really taking the old guard policies and underwriting structures and updating them to what we're seeing today.
So there's a bit of evolution and tweaking what the policies, but there is some innovation going on. That's exciting. Um, maybe maybe you could talk about some of the innovation that has been going on in the insurance industry, for either liquidity, or even for art. That would be great if you could talk about art for a bit.
Oh, yeah. So, from an art perspective, so much of the art is stored in storage facilities, which is really quite a challenge from an insurance perspective, from a more traditional property casualty insurance perspective. But I've also had a lot of people reach out to me asking for advisement on what I might do for authenticity and for title issues again. Because when we really created Eris, which was the art title insurance company, it was a little bit before its time. And today, so much of the art is being used as an asset to leverage. And so there's a lot more interest in bringing back standardization of transaction from what you see in other asset types like real estate, for example. So I do think there's a ton of innovation
Hmm.
from authenticity, and also tokenizing art and tracking things from um, a, um, a technology perspective and looking at the contracts to see if there's a way to manage some of that risk. So I think there's a ton of evolution going on in all asset classes.
hmm there is more tokenization going on. I think, especially in Europe, I've seen Artimundi and Fine Art Group and some others taking a stab at it. Do you think it's just at the beginning of that cycle?
Absolutely. I just think there's still a few problems that need to be solved, like the title and authenticity. But people are really looking at trying to figure out how to do that. And what I mean by that is we can put a lot of things on the blockchain, but until we can figure out how to tie that item to that blockchain, we still have some of those gaps. But I think they're absolutely um, innovating, and it's taken a long time. I used to talk about the blockchain technology from an art perspective 15 years ago. So I think
Wow.
those organizations are, the technology has evolved to be able to do some of the things that they want to do.
Yeah, you were early. That's exciting. So maybe we do another episode and bring some people together to talk about art. Right now, the first year, we've been covering the bigger picture issues from that the elite audience is interested in. I think in terms of wealth creation and protection and transfer, governance, culture, legacy. But ultimately, as we often talk about on the podcast, wealth is really what you make of it, and it drives that legacy. And then each person's legacy is different. So art is something, as a collector myself, in the area I'm very passionate about. I think it is increasingly going to be real estate and art, I think, increasingly will be key activities for next gens to get involved in because of the combination of financial opportunity and passion. So it will be interesting to see if tokenization will accelerate and deepen that activity and make it more sort of tech savvy and more global and more fluid, like we're seeing on Masterworks. Do you have an opinion of Masterworks and this tokenization of art?
So I think it's really complicated. I think when you talk about the next gen and what their collecting passions are, will dictate what we think about old masters, right? Because there's hasn't been a lot of interest in the old masters for what I can tell for about 10, 15 years. There are a lot of what we would call, I'm going to use the word orphan art, but that's not really the right term in Europe, where you have these collections that have been sitting in families for 400 years and they have the opportunity to get authenticated. Back in the art title business, we had one scenario where it had literally been sitting in the basement for 400 years and somebody recognized that it was a real authentic work opposed to the school of. And so it was a really interesting task to figure out on that one what import export laws we're going to apply to title. I mean, so it's very complicated, but for the right collectors who are interested in those types of works, I think there's lots of opportunity.
Yeah, totally agree with that. I'd love to talk more about that with you offline. We're going to wrap up now, but I want the audience to know how to reach you. If you could tell us a bit about your companies and if people can reach you on LinkedIn or any other way, would be great.
So I'm definitely on LinkedIn. Precision Brokers is www.precision, PRECISON-INS.com. You can get to me through J Pearson at precision-ins.com, and my telephone number is 303-917-7766. I would love to explore some of these issues if anybody's interested.
Fantastic. I hope they do reach out to you. Your companies are looking great, and it's a very important and complex time in the market for family offices, but also non-family offices that are becoming family offices or within a multifamily office context. So I'm excited for them to learn more about these issues. Thank you so much for today. I'd like to thank you for being our guest today, Judith, on the show.
Well, thank you so much. I really appreciate your time. And boy, there's lots of things to explore. So thank you for hosting this podcast in general.
You're welcome. Thank you for joining today. This is R. Adam Smith signing off. Stay tuned for our next episode of the Family Business Audiocast on LinkedIn.